Bitcoin and digital assets in general have a pretty unique attribute relative to, say, like US equities. So you've got almost 100% of the population on the planet that in theory could own Bitcoin. And that's a very different thing than any asset that's ever existed before. I think that the price will go up. To what degree and what time frame, I don't know. I think the most constructive narrative that I talk about when I talk to prospective investors and existing investors is to just view Bitcoin as a digital gold. And the truth of the matter is, if Bitcoin just became a digital gold and rivaled gold on a valuation asset class basis, all the other stuff takes care of itself. And I think the most constructive narrative is just to talk about Bitcoin being a digital gold and taking over gold. Gold's threatening to no one and nothing. And it's just a nice way to kind of Trojan horse our way into taking over the world.
Hey everyone, thanks for watching this episode. If you enjoyed this episode, make sure you like and comment below. And to find future episodes in your feed and push notifications, make sure you subscribe. And if you click the little bell, you'll get every new episode as it's released. Thanks again for watching. In today's conversation, I sit down with Eric Weiss, who is a digital asset manager for family offices and high net worth individuals. Eric started a fund in 2018 and has been friends with Michael Saylor for more than 20 years before eventually orange pilling Michael Saylor and building his conviction in Bitcoin. In today's conversation, Eric shares how he orange pilled Michael Saylor, his Bitcoin origin story, and Eric's professional background and his personal origin story, and how you can orange pill your friends, as well as his inside view into institutional adoption of Bitcoin, what the feedback from institutional capital has been since he orange pilled Michael Saylor, and much, much more. So with that said, let's dive in with the one and only Eric Weiss. Hey guys, I'm going to take a quick pause to introduce the first sponsor on the Jay Gould Show. I am happy and proud to say that this show is now sponsored by Withum Smith & Brown, which is a forward-thinking, technology-driven advisory and accounting firm that is committed to helping big and small companies be more profitable, efficient, and productive in today's complex business environment. Withum now also has a dedicated crypto and blockchain technology team to help early-stage businesses properly navigate all the crypto tax-related matters. I've been using Withum both personally and professionally for nearly a decade for all of my business's personal needs as well. I'm very happy with them and I highly recommend Withum. You can contact Withum by visiting their website at withum.com. Now back to the show. Eric, welcome to the show.
Thanks for having me.
First question I ask everybody that comes on this show is give me your top 5. These are the 5 people that you surround yourself with the most professionally. Kind of tells us, you are the average of the people you surround yourself with. So who are the people you're kind of communicating and doing a lot of business with these days and talking to on a regular basis?
On a daily basis?
Yeah.
Well, Saylor's definitely top of the list. I talk to him pretty much every day. My father was pretty successful entrepreneur in his own right and is now retired and teaches entrepreneurship at Columbia Business School. And I talk to him on a pretty regular basis. I talked to another one of my buddies who owns a large merchant cash advance business. And I'm just fortunate to have really good investors and partners who are extraordinarily successful. So talking to them every day is informative.
And I'm guessing you orange pilled your dad, right? You got Saylor, you got your dad.
I orange pilled my dad, whether or not he was, legitimately orange pilled or just kind of trying to be supportive of his son. We don't know, but at this point, he's happy that he was orange pilled.
That's awesome. Let's just dive into the Michael Saylor story. Before we do that, can you tell us about the relationship? Because I know you've been friends with him for a really long time. It's not like you just met this guy and orange pilled him. It's a relationship and it's something that built over time, my understanding. Can you just tell us about the relationship and then we can walk into the orange pill?
Yeah, sure. He's just, Michael's been one of my closest friends for a long time. We met probably a little over 20 years ago, and we just have lots of similar interests. We talk about investing, in particular investing in technology and things of that nature. We play a lot of chess. We do some traveling together, and we just kind of kick around intellectual ideas and thoughts all the time. And just having access to, his brain, which now the world has been exposed to through the many podcasts he's done, is just it's a tremendous asset for me. And just to be able to get his perspective on things is something I really value.
Now we're going to get into the story now about the orange pill and like how this all happened, which it's kind of cool because it's a process, right? It's never like a conversation. It's a process, right? But what's interesting is He calls you up the one day, say he's going to buy it, and then he does. And that's a great story. I just heard you tell it on The Wolf of Wall Street. So it was a great story. But what was interesting to me is like his rhetoric that he's developed, his narratives and his talking points, and how concise he is on television stuff. When you see him on CNBC, it's like you unleashed an animal. it's incredible. Did that surprise you?
No, it doesn't surprise me at all. I mean, having known Michael for a while, he doesn't do anything casually. He really does prepare and research thoroughly. He doesn't make haphazard decisions. He really is a very thoughtful individual who looks at things, as people now know, from pretty much every angle. And he also has an encyclopedic knowledge of history and lots of different areas. So when he analyzes something, he's not just analyzing it from like one perspective. He's kind of thinking about things in like kind of a 360 kind of view. So he's able to, in Bitcoin specifically, he's able to look at it from a monetary perspective. He's able to look at it from an engineering perspective. He's able to look at it in the context of history and money. And so he's able to bring a lot of great analogies to the fore that some people, different folks latch onto and relate to, and it clicks for different people.
So what's interesting though is like what pushed him over the edge. At least I have no idea. I wasn't there with you when you did it, but like what seems to have pushed him over the edge was all the money printing last year and the hedge against inflation, essentially, right? Is that what the big thing was for the straw that broke the camel's back for him?
Yeah, I think that in the past, he was certainly aware of Bitcoin. I've been in the space for quite a while and bought my first Bitcoin in 2013. And, as we're friends, it's something I've been talking about for a while. And it just wasn't on his radar, like things were humming along for him. His business that he started, MicroStrategy, was doing really, really well. And, running a public company is a full-time gig with a couple thousand employees. Plus, he'd been very successful in his own investing, right? And wrote the mobile wave and forecasted how mobile devices and apps would change our lives and dematerialize a bunch of things. So, just like there wasn't a need for it in his life, I think. And then, during the pandemic, we were hanging out, spending a decent amount of time together, trying to make sense of these changes in the world. The K-shaped recovery was something we were trying to get our heads around, as this money printing was inflating the price of assets, and we were seeing that stock market go up in that sense, in nominal terms. And I think that as he said in the past, in a good year, in a great year, his company would hope to make $50 million, and he's sitting on $500 million in cash on his balance sheet. And he's envisioning that inflation is at least 10% in real terms. So he's got $50 million melting away of purchasing power, while he's got 2,000 people busting their ass every day to try to make $50 million. And it's like you just feel like you're on a treadmill. So you're looking for a solution. How do you preserve the toils of yours and your employees' labor and everything that you're trying to do, and preserve that value? And, he evaluated all the alternatives. And I was there to help make sure that Bitcoin was one of the alternatives that he evaluated, and answer whatever questions with as much bias as I could foster. And, ultimately, I think it's, he made a great choice. I don't think that, MicroStrategy stock was like $120, $140 a share at the time when he did this. And he had $250 million to start this process with. And had he bought $250 million worth of gold, I think MicroStrategy stock would be lucky to be at the same $120, $140 level. And instead, he's created billions of dollars of shareholder wealth and done right by a lot of people, and help, inch the ball forward here for Bitcoin and its acceptance, at the institutional level.
I mean, it totally made sense that he did it, but to the degree at which he did it, like the conviction that he built so quickly to go basically all in. I mean, he's borrowing money to buy more Bitcoin. I mean, it's incredible. That's a quick study to be able to come with that conviction that fast.
Yeah, well, we spent we spent a number of days talking about it. He had great questions, and when he pulled all the knowledge that was in my brain out, he asked where he could learn more, and I pointed him to some other resources. And then he did an extensive amount of his own research, not just on Bitcoin specifically, but on monetary policy and the history of money and other things to make sure that he had full context. And then I think, and this is something that kind of he's impressed upon the Bitcoin miners and others, is once you're in, and it just makes sense to be in bigger, right? If I guess another way to say it is, losing is binary, right? If you die, you die. If a Bitcoin miner dies, it dies. So why wouldn't that Bitcoin miner, since death is certain to the downside, right? Why wouldn't you just make the opportunity to the upside if and when you win bigger, right? So that miner shouldn't be selling the Bitcoin that they're mining. They should be hodling that Bitcoin that they're mining, right? Like if Bitcoin goes down, you as a Bitcoin miner are already dead. So why not have more Bitcoin, for when it goes up and win bigger, borrow money, go bigger, like your investors have already signed up for, the risk that you're taking, just win bigger.
I mean, he's putting the whole company on the line for this, though, to your point, right? But he's not a Bitcoin mining company, so it's a software company.
Well, I mean, I think the operating business is doing well and is intact. And from what he said publicly, the increased profile of the company due to moving into Bitcoin. Don't forget they're a technology and software company. So the perception of being on a leading edge of something, a leading edge of technology is probably good for the brand as well, I'd imagine.
Sure.
And I think their underlying business, I don't follow the stock that closely other than to watch the price. I don't trade in and out of it or anything. But I think their underlying business is doing much better as a result of this endeavor as well.
So one of the things we talked about before we jumped on was the network effects, right, of Bitcoin, and the difference. Michael Saylor eloquently kind of puts this: it's a monetary network versus a social network, right? So I built social networks in the earlier part of my career, and you hit a certain tipping point, and it hit a certain amount of scale, like Facebook, and it's a runaway train. It doesn't stop, right? I had built a video sharing site years ago, and when you get to a certain level of growth, it's completely sustainable at that point because all the supply and the demand keeps coming into that network and that marketplace, right? Bitcoin is a little different. It's not about the number of people. A lot of people on Spaces and Clubhouse and the Bitcoin kind of thought leaders and stuff, they talk about bringing in more people. It really just needs more money, right? And most of the money, 85% of the wealth is held by like 10% of the people. The bottom 50 percentile people have like 1% of the wealth. So the plebs, while it's great that they get in and it's for a personal benefit to them, it's not helping the network as much as a Michael Saylor or Rupert Murdoch or Carl Icahn or something like that, right? So you want that money to come in, right? Because that's what's going to push the number up as well as taking supply off the market, right?
I think we need all people. I mean, there are advantages and disadvantages to large participants to the Bitcoin ecosystem, right? Elon's great. I have love for Elon as a Bitcoin hodler, but it also comes with some vulnerability, right? I mean, if he says, I'm out and dumps all his Bitcoin, the market will react. If, his $1 billion of Bitcoin was split up among a billion people holding $1 of Bitcoin, we wouldn't have that kind of risk. The other thing is on the political side, if this is just something for big money, that is going to face political backlash. Whereas the true benefit of Bitcoin, I think, is for the person who's not benefiting from this K-shaped recovery, who's suffering from that divergent wealth gap, who's living paycheck to paycheck, that maybe could save a little bit, but they're saving in dollars, and therefore they're not keeping up because their paycheck's not going up 20, 30, 50%, and their cost of living is. And so I think for those people, it's actually the most beneficial. Filter in that, so many billions of people on the planet are not banked and they do have smartphones. So if you can turn your smartphone into your bank and be saving in Bitcoin instead of saving in a fiat currency that's being inflated away, I think it's a double win for that demographic. So I think that those hodlers are for sure equally as important. If you're talking about driving the price up, then the big guys coming to the network are a lot more impactful.
Mm-hmm.
And I just, in the short term, but I do think it's like incredibly constructive to embrace all hodlers, irrespective of how much of their portfolio they have in it, whether, I think we just need to be a community. It's interesting to me because in a lot of ways, we're such a freedom loving community of Bitcoiners where we want everybody to have all these freedoms and all this freedom of choice. And yet we try to dictate to people how they should invest their money into Bitcoin. It just seems like a little contradictory to me.
It's counterintuitive. I totally agree with you. There's like a facet of Bitcoiners, some of the maxis, not all of the maxis, but there's a small number of them. It's like, if you don't have all your money in it, then, you should sell all your shares. Yeah. Why do you have shares?
I think the maxis are absolutely essential. I think they play an awesome role and they're really important. My concern would be that there's a little bit of a risk of the boy who cried wolf kind of thing here. It's like the maxis get so outraged over stuff that I would say is inconsequential when we should, it's like you don't want the whole world to kind of be like, that's the maxis. They just scream about everything kind of thing. Let's save that bark for when someone tries to fuck with the protocol, and wants to change something in Bitcoin. You want to change a block size. You want to start altering number of, coins or something. Like let's save the bark for the fights that matter.
I agree. The reason I brought up the point before about the network externalities and the monetary network versus a user network is that the bull case for Bitcoin has been, I think, the Federal Reserve's policies, right? I mean, it kind of really pushed. And I say that to some people, and they say, no, because Bitcoin doesn't care about the Fed. Bitcoin doesn't care about this or that. And I'm like, yeah, I understand that, but the people who own Bitcoin do, right? There are people who will own Bitcoin do. And so the interest rates now, right? We're seeing the tapering, and now they're leading towards interest rates. So I want to kind of talk about the Fed for a second here. It seems that for those that you're talking to in your everyday job, like what you do for a living, right? As an asset manager, you deal with institutions as well as high net worth individuals, right? So if there's rising interest rates over time and the inflation eventually starts to come down again, and the hurdle rate to get over inflation with investments, like we talked about previously, like, real estate and stuff, it might be slower adoption for Bitcoin if things like that start to play out over the next 5 years. Is that right?
Well, yes, but I would say like Bitcoin being a global asset, right? There are countries and individuals and institutions that are experiencing varying degrees of inflation, right?
Yeah.
What's going on is Turkey is not reminiscent of what's happening here, really, right? They're in like a hyperinflation situation. They're literally being crushed by inflation. Same thing in other countries like Venezuela, Argentina, et cetera. So, there are pockets of the world that are going to need Bitcoin irrespective of what the Fed does. That said, yes, the Fed plays a huge role in all of this. I think globally, we're in an environment where it's hard to envision money printing not being a continuing problem on a global scale, like global fiat printing. And, it's like politicians seem to have realized that you get elected or reelected by telling the electorate that you're going to give them more than the person you're running against.
Yeah.
And so if you're going to give more, that more has to come from somewhere, and it comes from printing. So, yeah, there'll be ebbs and flows of that printing, and we'll see what the Fed does. But at the end of the day, if you resign yourself to the belief that there's a global inflationary environment in fiat, then you have to ask yourself, what are the alternatives that people have to protecting themselves in this fiat flood, right? And there are few. Gold is not performing at all. It's the same price it was a decade ago. We're in the most inflationary environment that we've seen in 40 years. And if you listen to Peter Schiff, the most inflationary environment that we've seen ever. And yet gold was down today on that CPI number. So it's just broken. There's no other way to view it. If you go back to like Roman times, the majority of the world's wealth was held in gold. Now it represents less than 2% of the world's wealth. So it's been a decreasingly effective store of wealth for, centuries. So I think it's no surprise that it's going to continue on the downtrend. And I think Bitcoin as an emerging store of value is one of the few solutions, few answers to this. And it's the one that I bet on. Obviously, it's the one Michael bet on. And there are other ways to beat inflation, but they're not available to everybody. You and I were talking prior to this offline about some folks we know in the real estate space that are doing really well. And yeah, if you're a real estate mogul and you're making a 40% IRR due to your unique opportunities, or you're a billionaire hedge fund manager and you have lots of unique opportunities that the average person doesn't have, then sure. But if you're the average person and you want to save that $1,000 that you made and not have the purchasing power get melted away, what are your options? You going to do an interest rate swap, with Goldman Sachs? Probably not. So, Bitcoin is the answer.
Yeah, I mean, gold is definitely not the answer. Peter Schiff, it's like I feel like he's got to own Bitcoin, and he's lying at this point just because he's off brand. Like, it would benefit him no way to say I'm a Bitcoiner at this point, right?
I mean, the thing about Peter Schiff that frustrates me is I don't mind people holding strong beliefs as long as they kind of put their money where their mouth is. And last month when he was on Pomp's podcast, and he said on video, and I've tweeted it a bunch of times, quote, "Gold is a very small part of my portfolio." Like, you're not even eating your own cooking, man. Like, you're just a charlatan. You're just a gold salesman. Now, if you want to get out there and say gold mining is a good business because there are suckers out there that will buy all the gold that we can mine out of the ground, great, say that. Maybe gold mining is a good business. I don't know. I haven't looked into it. But holding gold is not a good investment strategy.
That brings me to it reminds me of Buffett. Like last year when all this started, the shit hitting the fan in before the lockdown started to happen, and we could see clearly they're printing money, and that's going to cause inflation. He has been against gold for a long time. It's greater fool's theory. It doesn't do it, but he bought Barrick Gold. I remember seeing that and I was like, wow, that's interesting. He bought Barrick Gold. How do you get Berkshire Hathaway to start looking at this? Because they took a look at Barrick. They quickly got out of that and unwinded that position within months, right?
We don't need everybody. There's 60 million millionaires on the planet.
Yep.
There are 21 million Bitcoin. There's only enough Bitcoin for every millionaire on the planet to own 1/3 of a Bitcoin.
It's incredible.
So we just don't need them. I mean, look, I went to Columbia Business School. Buffett's a Columbia Business School guy. I come out of the investment world. I'm a big fan of Warren Buffett. Like, don't get me wrong. But, asking 80-something-year-old guys what their views are in technology might not be the best resource. I think the best example is Bill Gates is the guy's best friend for many years, right? And he never bought his stock. And when he spoke to my business school class, what he said was, he talked about that exact thing. And he said he's comfortable investing in things he understands. And the examples he went through were Gillette. He said, I can't think of anything tomorrow that's going to stop people from shaving, lazy boy chairs and this and that. And he talked about Coca-Cola. And he said, if I gave you $100 million and told you go hurt Coca-Cola as much as you could, there's nothing you could do to it. There's a moat around it. People are not going to stop drinking Coca-Cola. And so, he was able to make lots and lots of money investing in simple, straightforward things. And that's great. But Bill Miller is a very well-respected value investor, which is a specific area of investing that, Warren Buffett is the king of. And Bill Miller said the other day how much he likes Bitcoin and that 50% of his, personal wealth is in Bitcoin. So there's an endorsement from a Buffett ilk.
Yeah, I only bring it up because he did capitulate on gold. That's the only reason I think about that. And I'm like, well, if he could do that, he could be brought up the curve.
He didn't capitulate on gold. To my earlier point, he capitulated on a gold miner. He capitulated.
Well, that's true. You could buy the Bitcoin mining companies, though. So if to that.
Okay, I mean, but like, is anybody going to, like, from Buffett's perspective, right, to analogize it to Coca-Cola or Gillette, are people going to stop buying gold? No, there's 5,000 years of history.
So he went by established history. That's his main trigger. Yeah.
He went for this company. Like, what is a gold miner? This company is in the business of digging this crap out of the ground, and they've got a built-in buyer. They don't ever have to worry about finding a buyer. They successfully sell every ounce of gold that they mine. So I don't know. Maybe that's a good business model.
Sure. Yeah, no, it totally makes sense. Let me just let's take a step back now. The institutional business that you have, right, where you're dealing with institutional clients and stuff. What is the most?
It's mostly family offices and high net worth individuals, but yeah.
Yeah. Well, it's still those that which control the money, right? The folks that are controlling the money. What is the most common questions and or FUD kind of pushback that they're giving you?
Yeah, the pushback from from high net worth individuals and family offices. It's changed, a year ago, the pushback would have been regulatory. And how is this going to get regulated? Our government's going to outlaw it. That's definitively not the case anymore, right? We have 2 senators on the Senate Banking Committee who have laser eyes on Twitter, right? I mean, there are clearly thoughtful advocates of Bitcoin, in the United States government. Gensler, as the head of the SEC, having taught that class for MIT, which I encourage anyone, if you're really interested in this stuff, watch the class for free. There's like 26 hours of him teaching online. It's free on YouTube. And he's about as knowledgeable as anyone I've ever encountered on the topic. So it's very informative. And from my perspective, you can see some reverence in his tone for Satoshi and Bitcoin. So I certainly think, even though he hasn't approved an ETF, in spirit, he's a friend. And so,
wait, do you think he will approve a spot ETF? Do you think that's going to happen?
No.
Interesting. So GBTC screwed.
Well, I also don't think it matters. I don't think we need it. There's so many ways to get access to it, to Bitcoin or Bitcoin exposure.
But if you believe that, right, and if let's for those that have GBTC in their like retirement accounts and stuff, I'm one of them. As you see the narrowing close, because it probably will never flip the other way, you might want to just exit out and go into a spot ETF in your IRA or something, right?
Yeah, I have to plead a little bit of ignorance on this. If it were me, I don't think I would take a loss at a 20% discount here or whatever it's trading at today. I don't follow it that closely.
Let it ride, I'm saying, right? Whatever that discount is, it'll change over time.
I think that at some point the SEC will have to step in and say, this product isn't working. This product is not giving the exposure that it's meant to give. And there will be some remedy there. And I would imagine, I don't know what the mechanism would be or how it works.
Allow them to sell some of the coin that they're sitting on, right? Maybe that fixes it.
Yeah. I mean, or maybe they just have to liquidate the whole thing and pay everybody out at, net asset value or something. I don't know how that would work.
Most of the people who own it probably have it in retirement accounts too. So maybe not, but I would assume that,
Yeah, I think there's a lot of holders who just couldn't hold Bitcoin, who needed to hold a publicly traded security as well. But so I think there are other ways to get exposure. If you read the rejection letter and read between the lines, I think what Gensler was looking to do was put pressure on the exchanges to come into compliance, and he doesn't really have a good way to do it. Mm-hmm. So, if you think about it from the SEC's point of view, you've got all these other coins out there, many of which are completely non-compliant, and it's very hard to choke 6,000 different throats to get them to comply. But an exchange represents kind of a one throat to choke kind of thing. And if you don't approve the Bitcoin ETF because you say, well, the exchanges aren't compliant enough, we're going to need those guys to be a little more compliant, otherwise we can't do this, then maybe you get that Bitcoin maxi community putting pressure on the Coinbases of the world to say, hey, man, we want our ETF comply. So I think that's part of what he tried to do with that. Interesting.
All right. So that was the concern, the regulatory. That's gone. So what is the new thing? Was it the Bitcoin? China banning last year was an issue, and because that probably frees things up. It's like the banning doesn't seem to affect it. So what is the slowdown in the institutional adoption last year? Do you think?
Our fund is seeing good inflows. Our Bitcoin fund, and the pushback is less. Right. Okay. I think that. Institutional perception, I think, is more, hey, I didn't get on, in the 60s. I saw it run up. I'm viewing this pullback as an opportunity. I think I'll dip a toe here. I'll start to accumulate. I'll buy some here, as opposed to that retail mentality, which of like, oh shit, that was the top. I better get out before it goes to 30 or whatever kind of thing. And the institutional guys have big, deep pockets and long-term views, and they'll just kind of bide their time and start nibbling away. There's some accounting issues with the gap accounting that we've talked about. If and when that gets resolved, which I'm optimistic that it will, I think we'll see a tremendous inflow of capital. So I think there are a lot of catalysts for capital to come on board. But the volatility scares people away a little, truthfully. And then there are other institutional investors, for better or worse, who kind of view Bitcoin in the same way that they view gold, which is that they just don't perceive enough utility, which I think is, probably a lack of education on the topic. But, there are people who say, I would never own gold. Gold has no utility. It's just not something that would be in my portfolio. There are a number of high net worth and institutional investors who have a similar perspective, and they're kind of looking past gold to some other digital assets with more utility.
So I told you before we got into the conversation, the pre-call, I have some old investors from my previous startup, the angel investors that are Wall Street guys. Orange pill them for me. Tell me how you get them, because these guys feel like they have no need for Bitcoin in any way. How do you get people to see the light? How do you do it? Because you've obviously done it with Michael and some others. How do you do it? This is what you do for a living. How do you orange pill somebody?
I'm admittedly bad at selling, right? So I don't generally speaking, where I come in is when someone wants exposure to the asset, to Bitcoin or the digital asset class in general, I give them the vehicles that may best suit them to get exposure and show them what the opportunities are and the pros and cons of all of those ways to get that exposure. That said, I think everyone, especially those with money, have the same problem, and that is inflation. And so the question to that institutional investor, family office, high net worth individual is, how are you faring against inflation? And sometimes they just don't even see the inflation. They own a house. They know their house is worth X million more than it was, and they think they're rich. And even though they're smart people, they haven't thought through the asset inflation, the opportunity cost, the replacement cost, the fact that other things in their life are more expensive, et cetera. And so if you can get them to start thinking about the reality of this inflation and how it impacts them personally, then you can start to think about how protected are they against this inflation. My guess is they probably have some serious vulnerability to it, like all of us, and they're looking for solutions. But there are those investors out there that have, companies or other vehicles or other opportunities that deliver a tremendous return, and they're just not concerned.
There's no urgency in the immediate term for that.
No urgency. But that's great. For those that have no urgency, those guys are an opportunity for the future.
Yeah. Yeah. They'll eventually come in. It's just, as they say in Bitcoin, you'll pay the price you deserve, right?
Everybody gets Bitcoin at the price they deserve.
Exactly. All right. So I want to go back to your origin story. Eric Weiss, tell me about where you grew up, socioeconomic kind of background, educational background. I want to learn more about you, because I don't hear a lot about that. I hear a lot about asking about Michael. I want to hear about you. So tell me about Eric.
Michael's more interesting, I promise. But I grew up in a upper middle class family in New Jersey, not far from where you live, yep. And I went to undergrad, University of Maryland, was a U.S. government bond trader after undergrad in the World Trade Center in New York. And then I left that to go to Columbia Business School. Had I not left, I probably would have been there on 9/11.
What floor were you on?
60th floor of 2 World Trade. So I went to Columbia Business School, and then after business school, I got into technology, venture capital, was investing mostly in internet-related businesses, and did that at a few different firms in the New York and Philadelphia area. And I was investing in companies that were leveraging the internet. And what the internet was really good for was sharing information and sharing data. What it wasn't good for was safety and security and transmitting value. And so in 2013, I went to a Bitcoin conference at the convention center in Miami, and everybody's walking around with T-shirts that said they'll help you set up your Bitcoin wallet or something. And it was really it was an interesting time, an interesting space. But what clicked for me was this was the first time that I saw the internet being used to transmit value. And even more interesting than that was Party A didn't have to know or trust Party B, or didn't need any third party intermediaries, didn't need to worry about the authenticity, validity of the Bitcoin that you were receiving. And this was pretty mind blowing to me. So I decided I needed to get involved in some way. And I thought first, like, what kind of company could I start? Yeah, I mean, seeing Bitcoin for the first time in 2013, I realized that we could now use the internet to transmit value. And I thought, this is a big deal. This is bigger than the stuff that I've been investing in. And I thought, I've got to do something in this space. I thought about starting a company in the Bitcoin space. And I was like, what could I do? Mm-hmm. You know, you could start a directory of companies that accepted Bitcoin. I'm not even sure that would be a good business today, much less in 2013, right? So, you know, I just came to the conclusion ultimately that rather than take any execution risk on any kind of business, I was best off buying some Bitcoin. And if this stuff worked out, the price was going to go up because there was a fixed supply. And that was my rationale. And I bought some Bitcoin in December of 2013, and the price went up. I felt like a rock star. The price fell way below my cost basis. I felt like an idiot. And then I thought, what the hell am I doing? And it went up again, and I sold at some profit. I don't know what it is. I sold all the Bitcoin that I had, and even though I've been buying aggressively, you know, kind of since then, I still do not have as much Bitcoin as I sold in Q1 of 2014.
I heard you say that on the last podcast. I was like, oh shit. That's a typical story though. I mean,
it's humbling, you know, like Charlie Shrimp, you know, told me the same thing. It's just, and that's why in times like we're going through right now, you know, everybody's living through it. I count myself as kind of lucky that I lived through it back then because, you know, I'm not selling now. And I think that there are a lot of people who are going to get washed out, you know, right now in this market because they don't have that experience. And, you know, if you hodl, your friends will say you got lucky. But the truth of the matter is it's not easy to hold when things go down or buy more. That's why you have to do your own research. You have to get your own knowledge, your own conviction, so that you can have the conviction to hold in these times or buy more. You know, if a friend of yours just told you to buy Bitcoin and you bought it, you can't have the conviction that you need, you know, to have those diamond hands.
This is a discussion that I'm sure you're going to be like queasy at hearing it, but in the short term, what do you think Bitcoin can do based on what the Fed's doing? I mean, it should have an impact on Bitcoin over the next year, right? With all the antics of what they're doing with potentially raising rates and everything, right? This should be a negative impact to it in the short term, just like it will be for equity markets, no?
I think that anyone who tries to predict what the next 20% direction of Bitcoin is playing a fool's game. I'm not good enough to do that. The beauty of knowing that you're not going to sell is you don't have to worry yourself with these trading things. You know, the conversation that I have a lot with my investors is this a good entry point? Where do you want to get in?
Yep.
That kind of thing. Michael and I have a friend who a couple summers ago at 10,300 was waiting for that dip below 10,000, you know, to get in. And he was going to invest a lot of money.
So what do you advise? Just the old dollar cost average thing? Like if you're not comfortable doing a lump sum?
I mean, I just like, you know, just buy it, you know. If the investment thesis works out, having bought it at 40,000, 60,000, 80,000, 100,000 will have been a great trade. I mean, maybe where my view is a little different is I don't think Bitcoin is a success at 100, you know, at $80,000, you know, or, you know, $2 trillion, you know, kind of capitalization. I don't think that's a success. I think that's the size of a large tech company. I do think that if we get to like a $250,000 price or maybe even like $100 and something thousand price, that things kind of snowball and this gets a life of its own and starts to eat a lot of things like negative yielding sovereign debt, low yielding sovereign debt, gold, etc. So I think it will kind of get that snowball kind of, action, and this positive reinforcement loop, self-fulfilling prophecy, whatever you want to call it. So I do think that'll happen, but I don't think it's a success until it's a lot bigger. So I still think we're in the high risk, high reward space.
Do you think this particular, first of all, do you believe the cycles are over? Do you believe the cycle theory? Like, what do you think on the cycles?
I mean, Bitcoin historically has traded pretty consistently with consumer behavior, which is why it's lent itself to some technical analysis. Yeah, maybe there's some of it in there, but don't forget, like Saylor says, all your models are destroyed. All it takes is one external catalyst. And what I hate about technical analysis, it's like you could tell me, well, when this pattern exists, 80% of the time this happens. Well, what the fuck happens if it's the other 20%?
It doesn't take into any, like to your point, any exogenous events that may happen. And then they'll say, well, see, I told you, because it luckily happens and benefits their model. But that's just pure luck.
I mean, what happens when Warren Buffett, right, says like tomorrow, you know what? I see the merits of Bitcoin. I'm buying, $5 billion worth of it.
What's the multiplier effect? Like 50 to 100x or something, right?
You think you'll ever see 50,000 again? You won't. So, and there will be someone or some entity somewhere that does something similar to that, right? It will be, Turkey could have printed a fuck ton of Turkish lira and bought, $100 billion worth of Bitcoin as a way to kind of backstop their country. They could have on the DL printed a fuck ton of Turkish lira and bought Bitcoin. And the first country that does that is going to win.
Well, we'll see the price moving up if they're doing that, right? If they're doing it at some period of time, right? Michael did something very interesting. He created like a bot to buy it so he didn't push the price, right? Didn't they do something like that?
Anything I may know is just kind of what's in the public domain, but I can tell you that all the exchanges do have time-weighted average price kind of purchasing order. So you can kind of, through Coinbase or somebody like that, institutional investors can kind of set it up where you're just buying like, X number of dollars per minute at the average price that minute and not move the market. So there are plenty of those kind of features out there. But then there's also people smash buying left and right on every exchange.
But when he buys like $1 billion, though, you don't want to just smash buy because you make your price go up too fast, right?
Well, I mean, yes, but keep in mind that, the over-the-counter market, the secondary market probably trades, 2 to 3x the amount of volume that the exchanges trade. So there are plenty of block trading going on the outside. So there are ways to buy bigger chunks and sell bigger chunks of Bitcoin. But the point being, there will be some catalyst at some point in the future, some announcement that actually has some meaning to it that moves the market, and it could be a fundamental change that we don't come back from.
Yeah, that's true. The risk is to the upside, is what you're saying.
Yeah, the risk is to the upside, and so my advice is just get in. If you're in and Bitcoin hits 500,000 of Bitcoin, you're not going to care if your cost basis was 46,000 or 76,000. Yeah. You're just going to be happy you're in.
Yeah, and to your point, like so. But moving back to when you talk to the institutional or high net worths and all these folks, are you advising a certain percentage of net worth so that they're not freaked out on the volatility as they make that purchase? Like, do you say like 5% or something like that? Like, because they're not going to miss it if it goes down by 50%. It doesn't matter, right?
Pomp back in the day, many years ago, had like what I thought was one of the most constructive phrases, which was just get off zero.
Yeah.
And so, that's kind of what I advocate. I think that institutional investors and family offices are fairly sophisticated, and it's really not for me to kind of tell them what percentage to invest. But what I do kind of do is categorize it. I say, how much money do you have in gold? How much money do you have in bonds? Well, the money you have in fixed income, you're locking in a loss of X% in real terms per year. Do you really want to do that? Do you really want to keep that money in gold? How's that worked out for you for the last decade? And so what parts of your portfolio where you allocate your capital should Bitcoin be the answer? instead of what you're doing. And that'll translate to a different percentage of capital for different folks.
Yeah, I always tell people if you put it in an amount that if it drops by 50%, you're not queasy about it, then you're not going to hurt yourself, because it's about investor temperament, investment temperament. The investor's temperament is what it's all about. It's like if you're going to freak out and sell and you're going to lock in the loss, that's too big of a size for you then.
Yeah, for retail investors, I mean, obviously you want to put in money that you can invest with a long duration, right? You should be investing an amount of capital that you don't need for 4 years.
Tell me more about what you think Bitcoin's going to do over the next 10 years, like a longer term kind of view. Like, what do you see adoption at? Because we know it's going to keep growing, right? So what kind of adoption are you seeing over the next 10 years in your mind?
So I think Bitcoin and digital assets in general have a pretty unique attribute relative to, say, like US equities. So probably about 20% of the world's population can own US equities. If you are living in Laos and you've got $100,000 net worth, you don't own any Apple stock. You can't get access to it, right? But you can own Bitcoin. You can own digital assets. So you've got almost 100% of the population on the planet that in theory could own Bitcoin. And that's a very different thing than any asset that's ever existed before. So there's an ownership base that is orders of, I don't know, it's probably 5x more vast than any other asset, which is not an insignificant data point, right? So over the next 10 years, I think a lot more of that group will be hodlers and Bitcoin will be in a lot more hands. So that's great. I think that the price will go up. To what degree and what time frame, I don't know. I think the most constructive narrative that I talk about when I talk to prospective investors and existing investors is to just view Bitcoin as a digital gold. And, we've got gold, which is roughly $11 trillion asset class. We've got Bitcoin, which is about $1 trillion. And so people can get their head around like a 10 or 11x kind of, move return from here. And I think that's a good framework to think about. And the truth of the matter is, if Bitcoin just became a digital gold and rivaled gold on a valuation asset class basis, all the other stuff takes care of itself. I think that, all this talk about Bitcoin being unstoppable, et cetera, if Bitcoin overtakes gold, I think it really is unstoppable. And I think the most constructive narrative is just to talk about Bitcoin being a digital gold and taking over gold. Gold's threatening to no one and nothing. And it's just a nice way to kind of Trojan horse our way into taking over the world.
I talked about a bunch about the law of large numbers a little bit, and Bitcoin's growth rate. So the trajectory, everybody always says it's been growing at 200% a year. Why would you invest in an asset class that grows at 200% a year for the last 10 years? And I'm like, that's at a penny, but nobody bought it at a penny and held it.
Right. It was like 140 or something.
Right. Like it's like 140. Yeah, exactly. Right. So, but that's not even sustainable, because if you did that for the next 10 years, it'd be like $175 million per Bitcoin. So that can't happen.
That's correct.
Right. So it's more like, I think moving forward, it's more like a reasonable CAGR. It's probably like in the short term, maybe 75 or 50%, but then decreasing and decelerating into like a 25, 35, maybe 40% CAGR over the next decade or so on average. What do you think?
I think that law of large numbers, you're right. I mean, it's hard. Look, a lot of people were probably disappointed with the performance of 2021 being up 60% or so. I wasn't, I wasn't. You can only go so fast without ripping the wings off, right? So, I mean, if anything, maybe I just feel like those that came in earlier, I wish kind of those that came in earlier got a little more of the benefit. It seems a little unfair to me in some ways that on a risk reward basis, Bitcoin is such a great value now relative to when maybe we first bought it. And so people can come in now and still get the majority of the upside, which is awesome for them. But, it almost just makes me think like, damn those institutions that are getting in now that weren't early adapters that are still going to get so much of the benefit. So, that irks me a little bit, but I don't think about it too much other than I think it's going up. I think it's going to go up materially. I try not to worry about the things that I can't influence or control in any way. And I think the future is looking really bright for us.
Last thing I want to ask you before we hop is I had Plan B. I posted that today, Plan B interview, and he's got the stock to flow model, which obviously got the two different models, the regular stock to flow, the S2FX model as well, which includes the basket of the other assets. He didn't hit 100,000, so that model didn't work fine. He said it wasn't the first time. It's like the third time that's happened, actually, when he first launched it in 2019. So nothing new to him. He's like, it's not going to be perfect, right? What do you think of the stock to flow model? It's a great meme, but do you hold any weight to anything on that, or?
I think it's constructive for people to offer frameworks to get people thinking about how to value something. And whether or not it has any validity or holds true, I think is secondary. It's not something that I ascribe a lot of value to. That's not to knock it in any way, but I think it's constructive to provide different frameworks for people to start thinking about how they might want to value Bitcoin. At the end of the day, I look at it as simple and pure supply and demand. And as adoption increases, as acceptance increases, as all of these things come on board, we've just got a really simple scenario where there just isn't enough to go around. And when there's not enough to go around, the price goes up.
Yeah, and I talk about this with Plan B too. It's like, because he doesn't factor in demand in the stock to flow. It's just about the supply and the mining of new supply. So it's he said, he said, admittedly, it's a very simple model. It just talks about supply of new mine Bitcoin.
But it's constructive, right? Because what it does is like the stock to flow model alone allows for a nice comparison to something like gold, right?
Yeah.
We can look at the stock to flow of gold and can compare it to the stock to flow of Bitcoin, and that provides a constructive narrative to compare those two different assets, which that in and of itself is constructive enough that I think the model has, some place out there. I'm not going to invest based on it.
No. But some people do. I think that's some of the plebs and the noobs, and they're like, oh, this model, and then it didn't work, and they're like, I better sell. It's broke. It's like, no, calm down. To your point, directionally, I think it's correct, right? Because of the supply cap and what have you. But for the demand, I feel like it's, as I said earlier in the conversation, I feel like the demand is the bull case for Bitcoin, and the demand is the interest rates and monetary policy, and that's not changing. So you're going to see this inflation on assets continuing to happen, and money's going to want to pour into Bitcoin over time as a result of that.
I think there are a ton of bull cases for Bitcoin. Yeah, that's a primary financial one, but there are other ones as well, right? There are moral and ethical cases for Bitcoin where, increasingly globally people are having their civil liberties taken away from them. And there's something to these people that morally and ethically feels good about holding something outside the system. Like, you fucked with this, you fucked with that. I want something you can't fuck with.
As Jason Williams says, hard money you can't fuck with.
Yeah. So, I think there are lots of really constructive narratives. There's the one, the digital energy one that Saylor and I spoke about on the Spaces the other day, where there's a real case where Bitcoin could make the internet a safer, more enjoyable place for people, with the orange checks. And I think there are lots of different ways that Bitcoin and the Lightning Network and other aspects could genuinely improve the lives of billions of people. It's not just, let me hold this thing to make money because of inflation.
One of the things, I was on Spaces with Saylor a couple months ago, actually, and I asked him a question because I saw him write a post about this. And I was talking about this earlier in the year when I saw him write the post in October. I was like, that's what I've been saying, that I feel like the volatility somewhat could be smoothed out if they can get rid of these wash sale issues. Not wash sales in you think they're doing in NFTs, but the rules for tax purposes, right? And he actually agrees with this.
The wash rule is going to go away. It's going to go away.
Probably this year, right?
It's a temporary thing. The truth, in my opinion, is that it doesn't benefit us. I think that the types of investors that I speak to who would consider putting material amounts of money into Bitcoin, they get an uneasy feeling that there are these nuances that exist, these tax loopholes. It makes them feel like, I don't know, man, if I get into this and I do this, this doesn't feel completely kosher to me. Maybe there's going to be some backlash to this. Yeah. This feels like it goes against the laws of the land. This isn't right. So I think as those things, as regulation and law catches up to technology and those things go away, I think that's a constructive thing for Bitcoin as a whole.
Last thing I want to bring up. I said 2 times now. So this is really. I just started
Yeah,
a new one.
I'm good, man. As many as you want.
Yeah. No, listen. The last thing I want to talk to you about is investing in Bitcoin companies, right? So, do you think that when you look at Ethereum and you saw that it came out like 5 years plus after Bitcoin and it's grown in dominance, I think largely it's because of the whole ecosystem that's built around it, right? And really, the Bitcoiners and the core developers, they push, like you said earlier, they kind of push back on any of this kind of stuff. Do you think that adoption and allowing things to be built or being more development around Bitcoin might help the underlying asset of Bitcoin to go up in price? And do you think that that kind of stuff will be happening over the next few years?
Absolutely. I think the Lightning Network and increased functionality, increased transactions is essential to the utility of Bitcoin. Now, the utility of Bitcoin may not be essential to the success of Bitcoin,
Yeah.
but there are a whole host of investors for whom additional utility makes it a more attractive investment. So I think that's important. And I think we'll see tremendous development in that space.
And do you think like the Bitcoin whales will want to invest in this because it's investing essentially in the future of their underlying asset? Do you think that that's something that you'll start to see more and more of? Or do you think it's going to be venture capitalists? Because I feel like the VCs of the world, the Andreessians of the world, the Chamath with Solana and all this, they're seeing they can create their own money out of thin air, right? So that's why they invest in as an equity. I think they invest in these companies as an equity investment, but they get a coin which actually hedges their investment because they basically printed money out of nowhere, and it's like a free call almost on their equity investment.
It's an apples and oranges comparison, in my opinion. So, the underlying asset of Bitcoin, as you well know, was from an immaculate conception, the likes of which could never be replicated again, in my opinion, right? The cat's out of the bag. We know the potential of it. There'll always be scrutiny as to who started this, where's the value, where are the coins, what's the cap table look like, et cetera, right? I mean, those other projects that you mentioned,
Mhm.
I don't refer to them as shitcoins. I have no disdain for them whatsoever. I think they're great investment opportunities for a lot of people, but that's liquid venture capital, in my opinion, in like technology, which has been my business in the past. It's still my business, and I love it, and I think it's great. What Bitcoin has that they don't have is it has a true layer one monetary asset that nothing else can compete with. So if you were going to build something, it makes sense to build something on top of that. And plenty of capital will flow to it.
Exactly. So, I that's why I wanted to hear what you think, because you have a lot of clients. You're friends with people in the space, including obviously Michael. I'm just curious if there is any effort and money moving towards investing essentially in the Bitcoin rails.
I actually heard of a fund. I mean, I think it was from a venture fund, but I heard of a venture fund that was raised exclusively, for Bitcoin Lightning. So yeah.
Cool.
Well,
Eric Weiss, thank you for coming on the show. I really appreciate taking that time out of the day today to tell us your origin story, as well as your Bitcoin origin story and the orange pilling and everything else. Thanks a lot, man.
Thanks for having me, Jay. Appreciate it. It was a fun time.